What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, May 2nd. All right, guys, a lot happening on the charts in Nvidia here today. It is down $33.61 a share. That's minus 3.89% in regular trading hours. However, it's up after hours. It's up about 1% in the after hours. Listen, guys, you'll hear me say this every time there's an after hours move. 99% of the time, I should say. Volume's low. Okay, if volume is not low, that's when you'll not hear me say this. But when volume's low, we have to take after hours with a grain of salt. Yes, it may confirm our bias. Yes, it may be up 4% in the after hours one day, or maybe down 6% in the after hours. If volume is low, and especially if there's no catalyst, have to take it with a grain of salt. I don't know if, those of you who have played around with a level 2 box late in the after hours especially, you'll know that it's very, very easy for stocks to get pushed around in the after hours on low volume. Doesn't even take that much volume, which is kind of ridiculous. A little bit scary. These stocks move easily in the after hours. They can get bullied and they can get pumped. So take it with a grain of salt. But I also like to add, at the end of the day, it is the real price. So if I'm a bull, I'd rather have it be up 8 points than down 8 points. Well, listen, let's take a look at this thing here today. Of course, today was FOMC day, Wednesday here. The initial release, the Fed left rates unchanged. That was not unexpected, so it led to very little volatility. Powell then came out and for the first time verbally put a lot of confidence out there that the Fed is done hiking. He said it's very unlikely that the next move will be a hike, implying that the next move will be a cut. That pumped the market. Don't ask me. To me, this was already painfully obvious, which I think the market then took note of and faded back prior to the close. Well, listen, let's keep this an Nvidia video. If you want to watch the SPY video, you can take a look at that after, but let's talk Nvidia. Starting with doing a quick little volume profile analysis on the 5-minute chart. We will then move into the psychological levels for tomorrow that the traders, the institutions, and I think we need to be paying attention to here tomorrow. And then we'll finish out with, of course, the expected move and the bias, the directional bias, coming out of the options chain here today. So, here on the volume profile, again, guys, if you're new here, by the way, if you are new here, NVIDIA is a daily upload, so I appreciate you subscribing to the channel. The fresh goal here that I've set is 10,000 subs, so I appreciate it, and I will keep the NVIDIA videos on the way. What we're really doing here is we're looking under the hood, right? The price action is done. We can see it. It's clear. What we can't necessarily see unless we go looking for it is the bias in the volume that lives down there in the volume, okay? Because we can have, I think the best way to explain this is, let's say you have a stock that in the middle of the day dumps 20 points. And then it recovers 20 points. Most people would look at that and say, well, that's a net neutral move. At the end of the day, it didn't matter. And in terms of price, they wouldn't be wrong. But I would argue that I always want to have, you have to understand, we're competing. This is the NFL. This is the highest stage as far as or one of the highest, biggest stages as far as money is concerned on the planet. The whales are here, and if you want to play in that ocean, right, the market, you have to do everything you can. That doesn't mean you have to watch charts for 12, 16 hours a day, right? That wouldn't even be possible for the vast majority of you guys, right? You have lives, you have, job, you have wife, you have kids, husband, whatever. But really, that's the purpose of these videos. I'm trying to take everything that I deem as kind of frontline important and pack it into like 10 or 15 minutes a day. So if we look here, we have some very clear, we're going to look at this pump and fade, right? But we have little downside moves here, like this little dump off here, little recovery, dump off, okay? Consolidation / recovery, dump off, right? And then the intraday low. If we pull up the volume profile of that, now looking at this, is there anything incredibly painfully obvious? No, but this is a small amount of bearish bias. It sticks out, right? It is there. It's just 3 consecutive bars, but it's a little out of context. We expect this fade, this volume, to fade off the open in a more clean manner, and we didn't really get that. We saw this pop up. That's a small amount of bearish bias on that downside move right here, right? And it does kind of cast a shadow on the recovery volume. So that is a small amount of bearish bias. It's not massive, but it's certainly there. These two here, there's too much of a risk of fooled by randomness. Like you get this one here, it's just one candle. These two, in my opinion, more or less, you know, those are going to cancel each other out. So we can move on from there. As we move into this upside move, okay, pop, 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 they're separated. You know, bulls, if we're not unbiased, what in the world are we even doing here? So this is again, too much of a risk of fooled by randomness. And some of those bars are going to be battle bars with high volume coming in from both buyers and sellers. So we move past that. And what I think is really interesting on Nvidia here today is when we looked at the market, it didn't look like this. Okay, like SPY, I mean. But we look at Nvidia and we're seeing higher volume on average, even with a couple of mixed in, like look, you have a couple green bars mixed in, you have a couple red bars mixed into the green mixed into the red. We're seeing higher average volume on the upside, the front side of that move in the late afternoon, right? Than we are on the fade, but the fade is heading closer to the close. And if we were to pull up like the most average looking volume profile to exist and just lay it on top of this chart, we would see kind of that teacup shape, right? It fades, it kind of troughs out in intraday during that lunch hour, at least in New York. Maybe that kind of like early to mid-afternoon hour, right? And then it increases into the close. But we're seeing this pop, and then it actually pulls back right into like 3:30 Eastern time, which is not all that normal, right? Usually we see that steady increase, and then it quickly kind of, you know, hockey sticks in terms of volume into the end of the day. This here, by the way, that's the portfolio rebalancing bar that gets triggered by algorithms, funds, and institutions after the closing bell. So this is almost always there, and it almost never, very rarely, I should say, leads to any substantial movement because it's such a mixed bag of buys and sells. But to me, even though we're seeing mixed red in with the green, this here, when you compare it to this area here, right, that yells a little bit of bullish bias because I would expect that to be more opposite, like flip these two in terms of the size of the volume because it's heading closer into, or deeper, I should say, into, I guess, power hour, what many would call power hour, closer to the bell. Right now, power hour historically, just so you know, moving forward, the reason I hesitate is because power hour used to be the last hour of like Friday, because it was heading into the weekend, right? But in today's day and age, it's entirely fair, and I would say if someone ever tries to correct you on this, I would say that they are in the wrong, because I think it's entirely fair in today's day and age to say power hour every single day of the week, considering the amount of participants and the increase in volume and the increase in participants that we've seen over the years here, especially recently, to the point where it's really no longer just a Friday deal now. But let's move on here and take a look at the psychological self-fulfilling prophecy levels, starting with the popular 30-minute chart. Okay, so you guys remember yesterday that we were talking about on Nvidia here how we had given up the 50-period moving average here specifically on the 30-minute chart. Well, today we gave up the 200-period as well early. We tried to reclaim it and tested the 50-period as it came down with the stock moving downside. The 50-period also moved downside. The 50-period on the 30-minute chart is going to be a quick moving average, at least in a day-to-day context. However, we rejected hard. Of course, this was more of a market-wide move, okay? And we ended up kind of back down where we had, a little higher than where we had began prior to the news. Now look, a couple of things here. It would not surprise me at all if we see this 50-period cross downside over the 200-period. I don't care about the crossover. What I care about, though, is that would become the immediate level to break, okay? Bulls, we're really not far from those levels, okay? We're less than 1% away from reclaiming both of them here in the after hours, okay? Which means that the 50-period is likely to come downside by tomorrow, making that necessary move even a small amount, or, you know, a little bit less to cross over that 200-period, which at that point would be the higher one. So bulls, Best case scenario tomorrow would be a high volume break upside through both of these, a low volume retest of whichever moving average happens to be higher at that moment, and then a high volume bounce away from there, reclaiming both in one swift action. Bears, for you guys, it's simple. Whichever moving average happens to be lower at the time of an upside test, okay, if we were to see that intraday, I don't really care what volume it tests it on as long as you see a high volume rejection claiming that lower moving average on the 30-minute as short-term resistance here. All right, or more so confirming it as short-term resistance. Let's move on here to the 4-hour chart and take a look. So you can see here, guys, that we were struggling the last few days with that 200 period up top. We faded downside yesterday, and now here today, we also gave up that 50 period here on the 4 hours. So we closed at 830.41. So again, the 4-hour chart is going to look a little weird, right? Because you're dealing with 8 hours of data packed into a 6.5 hour intraday session. So this second bar is always going to have a little bit of after hours movement with it. Okay, but we closed right up here, right below the 50 period. In the after hours, we have reclaimed it, but again, after hours is low volume. Take it with a grain of salt. Tomorrow, here's really what I'm watching. Bulls, closing beneath it. We're above it in the after hours. Listen, I just want to see at some point in the intraday session, I want to see a retest of that 50 period and then boom, that high volume bounce. Okay, whether we open below it or above it, however we end up in that position, whether we have to reclaim it first or just come in for the retest immediately, that's what I want to see if I'm a bull. Okay, because confirmation is king, really. Bears, you want to see that exact same thing, but seeing the 50 period act as resistance. Okay, with a test and a rejection. Really simple here on the 4 hour. Now the daily chart, guys, this is the most important one of all. It's the most important because it has the most eyeballs. If we take a look here, a couple of things going on. Today, we gave up the 50-day moving average. We also gave up $8.50 a share. Now look, this is the daily chart. It's not going to show after hours movement. That's okay. In the after hours, it's still below 840. Okay, so we gave up two relatively important levels. We broke downside out of that channel from 850 to 9 here today. Bears, the 50 days above 850. So any retest upside of 850, you want to see 850 reject ahead of the 50-day and just hold that as resistance and potentially set yourself up for a near-term downside test of, $800 a share, maybe even that next level of 750. Okay, is what the bears are going to be watching. Bulls we just want to get in the heads and know where the bears' heads are at. But bulls, really in the more near to mid-term, the ultimate goal is to get above 9 because that sets the bulls up for an upside test of all-time highs, really $1,000 a share. But that starts with getting back into that channel. Okay, so bulls getting back above 850, but then you have that 50-day moving average that everybody's going to be paying attention to right in front of your face at that point. So really getting above like 860 is kind of best case scenario, at least with a realistic volatility day-to-day perspective. That would be a great thing to see out of the stock. Now, implied volatility, guys, if we pull this up, basically unchanged here today. Again, still sitting in kind of that like mid to maybe slightly higher range depending on how far back you're comparing to. Remember, you always want to compare IV to your intended trade time frame. So if you're buying contracts for a year out, don't compare to the last week and a half. If you're buying contracts for 2 weeks out, you don't need to compare to the last 2 years, right? Keep it contextual. Now, the expected move on Nvidia, of course, the next expiration here is going to be May 3rd. That's Friday's close. Okay, so we have Thursday and Friday prior to that. And the expected move by Friday's close is plus or minus $29.61 a share. And that is compared to today's closing price, not the after hours price. Okay, so plus or minus $29.61 a share by Friday's close compared to today's closing price. So now if we go ahead and divide that by 2 trading days, Thursday and Friday. Okay, there's no earnings in between now and then. Of course, earnings is later in the month. And then we add back 50%. That's what I'm adding back in this market to make up for the fact that, just dividing by 2 assumes 2 red days or 2 green days in a row. So we have to make up for the fact with the possibility of a mixed bag. And when it's all said and done, with a little bit of guesswork, because we don't have the luxury of daily expirations on Nvidia, so we have to do everything we can, we get about $22. This is plus or minus $22.21 per share of expected movement by tomorrow's close, Thursday's close. Here we're trying to break it down day to day, even with not daily expirations. Now again, listen, if you are newer, that by design does not have directional bias baked in. That's the volatility expectation. So how do we get the directional bias even more than the analysis we've already done? Well, there's one more thing we can do. This is the options volume. All of this is just from Wednesday here. 1.75 million total contracts traded. 1.03 million of those were calls and 719,000 were puts. So we are seeing a bullish bias on the overall call per ratio. But one more thing we can do, this video is primarily geared toward Thursday, right? If we break it down by time frame, the short-term speculators, that 0 to 20 delta range, we had 441,000 calls and 302,000 puts. So a bullish bias out of those short-term speculators as well. Listen, guys, just a heads up. I just opened up a couple of platinum spots. There are, I think, 3 remaining as of right now. So if you've been thinking about grabbing a one-on-one coaching position, I just opened a few up. So go ahead and do so before those sell out. You can just use that link in the pinned comment. And hey, by the way, if you're getting value out of these daily NVIDIA videos, I ask you to do one thing. Takes half a second. It's 100% free. Leave a like on the video and then get out of here and enjoy your night or your morning, depending on when you're watching this. I appreciate it, and I'll see you in the next one.